Hey guys, hope you're all well and hope you are getting some well needed rest over the weekend. Now, I do apologize for the delay. I was doing some very exciting stuff regarding the Crypto Wizard course. Now, I haven't really slept in around 2-3 days now, as I have been working on some pretty crazy things, very exciting. Again, nothing will be revealed just yet. I do not want to throw my cards out on the table, but I'm very excited for what's to come. So I have been prioritizing a bit of the work behind the scenes for the time being, and I do apologize, but the market has just been free floating anyway to certain key levels. So again, I always use the weekends especially to kick back. Although the market is trading 24/7, I still almost follow the principles of Forex, and I highly suggest you guys do as well. Very volatile weeks in the crypto market, and it's good to utilize these weekends to do more of the analysis versus the trading, and save the trading more for the weekdays, as the volatility normally does kick in around the Sunday periods anyway, shifting back into the weekdays. So I just wanted to make a short recap, a little update. Just wanted, again, new members just flying into the Telegram, and please do not be afraid to share the word. I do want to make this one of the biggest crypto telegrams in regards to analysis, in regards to news. I've been a bit behind on news. I'll be blasting through some articles for you guys very shortly as well. All of that stuff now. I've done some of the behind the scenes work. Update you guys. I still consider you guys members. I keep wanting to say the word members, but you get what I mean. So having a little look at this article, I want to kickstart this little analysis with a overall review of the market, and a very common reoccurring theme in the crypto market is when price begins rising, all of the articles shift to bullish. When price begins falling, the articles change to, is it the end of Bitcoin? Is it the end of the crypto market? The bears take control again. And if you actually just go to the charts, let's use the total market cap as an example for this one. Using a daily time frame as a perspective, you see one move like this and the article suddenly shift to, oh my God, crypto's over. Oh my God, the bears will take over. The bull run, has it been cancelled? But then when you shift yourself over to the monthly time frame, in the grand scheme of the overall movements we've done, you can see that nothing has really happened. And overall, we are still projected for our huge upside breakout. I do not believe this will be an all-time high breakout, but this has been covered since the very first Wizard Wednesdays. I do believe there is going to be a short-lived pump, especially for BTC, back up to 4,700, potentially 5,500, and then we can dictate from there. But again, whilst these long-term calls actually unfold, I have been focusing on a lot of intraday stuff for you all as well. And for me, it's important to really identify where these swings occur. I know it can get quite hectic. I know it seems like biases can change very quickly. But as you can see, this market is just, at the moment, in the past week in particular, we are shifting from bullish to bearish on an intraday and an intraday perspective almost every single day. So I like to actually keep it active as well, because the problem is with providing these long-term targets, it means the Telegram stays very quiet, and then I'm not really any different to anybody else. So I like to provide the long-term targets with the intraday and the intraday targets and the movements, because the more we stay in sync with the market in terms of the spikes, if we quickly change bias with the market, we remain in flow. And this is what it's all about, because it's very easy for us to just say now, buy. And again, this is why I provide the intraday stuff, because if I go over to BTC and go to the weekly time frame, it's very easy for me now to say, especially for hodlers or physical buyers, yes, buy, we're expecting a breakout here to 5,400 or 5,500, where the trend line is, but then there's no real fun, because you're then stuck in limbo, waiting several days to even weeks for price to actually unfold towards those long-term targets. So I feel like by providing the intraday calls, the constant updates, it keeps it exciting, it keeps us in sync with the market. And for me, that's what it's all about, because right now I could very easily say, long-term buyers or day traders or long-term traders, why not just hold this move up to $6,000? Just keep your stop loss here nice and wide and ride out a huge wave. It's definitely going to $6,000 soon, but there's no real fun and there's no real skill in that, because it's too easy, to be honest with you. It's like when the bull run was happening, it was very easy and I was getting so many calls right, because It's not hard to catch a long-term trade in this market because with such significant movements. When BTC broke below 6,000, I considered that a fairly skillful call because it wasn't really expected, but using these movements here like 6,000 going to 7,000, it's too easy because the market's doing that anyway. And looking at breakout levels, it's very easy for me to say long term we'll go back to 20,000 because of course we will. And it's very easy to say we could fall down to 1,000 because of course we will. But when you're focusing more on the daily and the weekly perspective, there's a bit more skill involved and a bit more actual analysis going into it because the Telegram stays dead otherwise. And I don't want to be the person that just provides news or little voice notes here or there. I want to provide voice notes, analysis constantly, and just keep you guys in touch with the market. That's what it's all about for me, and I feel that's why things are a bit different over here at the Wizard. So having a look at this right now, let me just go back to these articles. First of all, I do not know anything about these cryptos. Or obviously BAT, I know about BAT, and BAT has been breaking out in line with our calls. But using these articles as an example, I want you to ignore the cryptocurrencies and focus more on the articles themselves. And you'll start to see a very reoccurring theme here. Now, first of all, BAT, yes, I do agree. We actually did manage to catch the bullish breakout that was covered in the Wizard Wednesdays. So I feel it's best to start off with the weekly perspective for BAT. So as you can see with all these key levels, I need to clean this up a bit and get rid of those key levels. Leave that one there. So focusing on a weekly perspective first, you can see with this huge drive to the upside, it spikes precisely yet again. Third trend line bounce with a huge pullback from 32 cents all the way back below into the 0.27. So very, very significant pullback from that region. Precisely spikes 0.32 as well, if I may add. I mean, sell orders clearly set there in advance. Huge liquidity zone, somewhere to pay attention to in the future. And all I will do is mark this nice and clean with a green liquidity zone sell-off region. So nice and clean, keeping it in the Wizard theme as well. And as you can see, the original projected target upon a breakout of this level of 22 cents was in fact a rocket ship up to 28 cents. And we have fulfilled that region with the current weekly candle actually now pulling back and sustaining back up below this region. And using the daily right now, as you can see, after pulling back, we're now consolidating around this zone as well. So using this aligned with several other factors, we're going to see what the overall market bias is. And again, using these trend lines as a very key indicator because price is respecting these trend lines right now. And if you use BAT as a good example, it's actually some of the cleanest PA I've seen right now, especially pending that breakout, which we'll get to in a second. So as you can see, huge spike, pullback, huge spike, pullback, huge spike, pullback, huge spike. I'm presuming we've got another pullback on our hands as well. Again, back below at least to these regions, because if we're looking at this level of around 18 cents, that fits in very well with XRP dropping to potentially 28.5 cents and potentially even lower. We then have BTC with that level just below the trend line as well, around 3,700, potentially breaching $3,600. And of course, Ether, looking at that zone there, that could drop us to that $105 region as well, just below where $130 is. Now, using this trend line, we'll start off with Ether, a good example. So if you do remember from yesterday's analysis video, using this daily time frame right now, we did mark that potential threat region and we did spike through, now pulling just back below this region. Now, what I believe is unfolding, we have a lot of upside spikes occurring. So what I see happening right now before we see this eventual and potential pullback that could be very, very significant and sharp, again, using the trend line here as guidance, we've broken through this trend line. There hasn't been a retest yet, and we haven't breached this trend line as of now. So using the fact that we haven't met this trend line yet, do be cautious of an actual retest and a breach through this trend line, because what is happening right now, if I go to Yahoo, you can see the market is losing its correlation. It's good to see because the coins are starting to move in inverse correlations. The past few days, we've seen BTC and Ether absolutely pop to the upside, whereas XRP has maintained a significant weakness, only to follow through several days later with a huge upside explosion of itself. So it seems what happens now is whenever a crypto, in particular the top three, breakout or to the upside or downside, if one of them does not move in that same direction on the same day, it's likely to follow suit within a few days. So take that into consideration as well. It seems to be a reoccurring theme right now. Again, looking at Ether 1-day chart, looking at the BTC 1-day chart and the XRP 1-day chart, very significant movement. BNB, first of all, as well, looking like one of the best potentials to actually break out right now. We did see that pullback to around $15.50. I was hoping to see a potential $15 retest and a break below. That hasn't happened just yet, and from what I can see right now, this is looking extremely bullish, if I say so myself. I mean, breaching that $17 region once again, this thing could absolutely blow through the roof. So something to be cautious of. Again, I'm not a fan of buying at these levels. It's not really worth it for me. If you are a long-term holder and you are looking to buy, you have to take into consideration there can just be a major meltdown at any point. I mean, this weekly candle to me, well, if it closes like this by tomorrow, I'm expecting a huge pullback to the downside to the projected levels covered in the breakdown. So I want to be cautious around this region. I know it looks extremely bullish and it looks the most bullish out of the majority of the market, but unless it does break out, it will likely cause an altcoin rally of itself, and that could be a big staple for the market. However, these rejections at 17.5, they are almost precise and perfect. So it is seeming to be the reoccurring theme, the conservative case for a Bitcoin rally to $50,000, the great wealth transfer. What the fuck does that even mean? Excuse my language, but there's so much rubbish in the media now because price is rising. From bears to bulls, financial advisors change opinions about Bitcoin after crash course. Bitcoin breaks resistance to hit $4,107. Is a weekend rally surfacing? It's all of these articles right now. They're using CoinMarketCap for analysis, which is absolutely outrageous. But the overall agenda and the way this market works is when price goes up, the articles flood the market. And this is normally a trap. If you've actually been studying Bitcoin for a while, again, we could break out, granted, but if you've actually been studying how BTC has been moving, especially since 2017, in particular, every time price rises, the articles come out bullish. Price never, I would say 95% of the time, does not follow through on those news articles. These articles and these news organizations, these media corporations, they're all interlinked in one way or another. Insider trading, we've heard about the Brexit insider trading, there's crypto insider trading, there's CME futures, literally dictating every single movement in the market right now, which is obviously Wall Street. So you have to realize a lot of this insider trading is interlinked from the banks, the governments, Wall Street, to the main articles and the article providers and the corporations such as Cointelegraph, the other ones out there as well. Cointelegraph is the biggest one for me personally. I do not really like to post their articles too much unless it is actually regarding a real news announcement. But when it comes to coin analysis and stuff, it's just, look at this. It's again Z Crypto, very random stuff. What place this is the Bitcoinist, very random as well. I do not check these out. News BTC is a fairly good site, to be honest with you. They do provide some interesting information. However, it is always very biased towards certain cryptos, and it's always a very FOMO approach to the analysis. So it's funny because fundamental news doesn't necessarily work as well as it would with the Forex market. But when you start to understand and read into how these news articles are published, how they're biased, and how they are published around certain regions in the market, and when price is moving, you can actually use that as a fairly good guidance onto where price is heading next. Again, fundamental news isn't the biggest factor to use in crypto, as again, the price has already factored this in. But using this as a good example right now, the total market cap breaking out of that zone, retesting, it's looking fairly bullish. Price cannot look more bullish right now if it tried, and I'm fully admitting that, but it's happened many times before. So right now I'm in that stage where I'm being very cautious about this market because we are at a key level. Again, this was covered in the Wizard Wednesdays as well. The trendline retest, guys, look at that perfection. We spiked the trend line and the zone. We pulled back, we retested the trend line. So if I drop down to the 4 hour, you can see from this right now, it is looking like there is going to be one final surge around these regions. So what I'm remaining cautious of right now is the upside regions here where the prior wicks are and these trend lines. Combining that with the Ether trend line in play as well, needing a potential spike to maybe 152 before seeing that initial pullback to retest this trend line and hopefully breach, retest 128 and dip down to this level. For me, before this breakout does occur, again, I've covered this already, but Just looking at this now, very promising bullish momentum, and it looks very similar to the momentum that was breaking out here. As you can see, we pulled down, pulled up, pulled down again, very similar, climbed up around halfway to around 61.8 Fibonacci level over there as well, maybe even a bit higher. And then what has happened is there's been a very sharp drop upon testing the trend line. So we're seeing a lot of similarities in the market price action, and it's not something to take lightly, because again, if you look at it this way as well, it has technically mimicked this side, which could break out to the upside. But looking at these levels and looking at these trend lines, if it does break out, I do feel it will be very short-lived. And just judging from these articles right now, it's just making me very suspicious, because you have to realize the aim of the game is not for the retail trader or the regular person to actually succeed in this market. The goal is for the outlets to actually misinterpret and confuse you. The goal isn't to aid you in success. Otherwise, many of us would become extremely wealthy. And it's made me just a bit more alert in this market, because many things can change in a heartbeat. And looking at the Ethereum 4-hour as well, pullback, spike, pullback, very easily could see that final breach higher to that trend line, and then price starts rolling down. Because I do feel, especially with this daily candle closure, huge indecision after such a significant rally. Again, it's happened here, huge spikes accumulating. That is why you have to be very cautious, especially if you're day trading. I wouldn't really recommend day trading. I would recommend more swing trades for the crypto market right now, because of this huge momentum that's occurring. Once you see a huge significant movement, you can swing trade with a nice wide stop loss and ride the waves up and down. Very simple stuff. So breakout, 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 breakout. Should see the same thing occur. Trend line and pull back to this zone. So looking at these regions here, a fairly good downside target. I just feel that the market will drop sharp, fulfill this region one more time. We've seen it here, we've seen it here, we've seen it here. We've seen it many times over now, especially on a daily basis. There has been a lot of significant movements before breaching higher. And as you can see, every time price actually absolutely rockets to the upside, it's after testing a major low level. It does not normally just break out. The actual breakout normally occurs upon a very lived downside push. So as you can see, even these huge upside movements here, they're always after a massive swing low to the downside. Massive swing low. Similar movement here, looked like it was going to absolutely rocket. Hit a peak just under the trend line, and bang, it absolutely melted. And this could be occurring once again. So taking these into consideration, these levels are here to potentially be met. And it could just be a bounce, another bounce here, and then bang, rocket to those upside targets we've covered. And same goes for BTC. Going to the weekly right now as well. Weekly taps that level, still has not broken the prior wick, so we are making lower highs in the progress as well. Taps the trend line, tap the other trend line. Should this roll over, you're looking at that region there, potentially breaching down to this level in the absolute worst case scenario. Would not surprise me in the slightest. But again, it's just remaining hesitant and preparing for the worst. And if you're actually prepared for the worst, technically it isn't really the worst. So I'm just trying to train you guys to be a bit more prepared in the market and understand that whatever looks too good to be true normally is. And what seems to be the case right now is when you're seeing these huge wicks breaching to the upside, looking at where they're actually rejecting is a bigger telltale sign than the wicks that are pushing up to the upside. And going over to XRP, same thing occurs right now. Using these levels here into consideration, 1, 2, around 0.35, and of course just below around 0.32, but I will probably drop that down to the 30s as well. Huge upside projection, which tells me there could be another attempted push as well to these zones. The trend line's coming into play. I'm not going to cheat and draw that down there. I'll leave it up here. But as you can see, there was potentially a third trend line test, confluencing with 0.325 as well. So regardless of what's happened on the daily time frame, if I use the 4-hour, yes, the trend line was broken, but look at what's occurring right now. Broken through, pulled back, rejecting this trend line once more. All I'm being prepared of is another potential spike to these zones up to where the prior liquidity was. Again, major sell regions, let me just mark that off for all of you. Major mark regions here, liquidity spiked up. Didn't even breach it this time, pulled back lower, broke through, retested trend line. Similar to what we saw here. Broke through the trend line, pulled back up, retested, and absolutely melted. Same occurs here. Tested the trend line if you wanted to Have the other one extended out as well. You can see that it tapped, it fell lower, tapped again, tapped and falling lower. So again, if you are in the short, just be cautious. Big wide stop losses, because this thing can absolutely rocket right now. What is really going on is, again, daily perspective, broken through, but overall it is now closing below. 10 minutes till midnight here in the UK. This should be closing very shortly, and what we could be seeing is a very similar movement here. So as you can see, huge wick to the upside, slowly followed through several days later or even the same day, and then absolutely melted. Same occurs here. Huge upside wicks projecting. I'm hoping this isn't one of these scenarios, but what you're seeing here is a huge upside projection from these wicks, candle spikes to retest a very similar region, and then it absolutely melts to the downside. So I am just being cautious. Again, it's not 100% certified, but for me, this is a much larger possibility than actually breaking out to the upside right now. Because if you are using these articles as an indicator, it seems like they're enticing people to buy. It is literally the purpose of these articles. They want you to buy. But then if price is going to go up, why would they want you to buy knowing it's going to make you money? The goal is for you to not make money. So the way it's working right now for me, in very simple terms, is there's an agenda to push a bullish bias to the public, whereas in reality the charts are subliminally looking fairly bearish. Again, using the signs, lower highs 1, 2, 3, 4, 5, 6, they are getting progressively lower despite the spikes that are occurring. Many of you who actually caught the analysis from the past few days caught the short from the very top, so congratulations if you did. Could be a very interesting ride to the downside, because for me right now, it's not actually about the short, it's more about the long, because the long opportunity far outweighs the short opportunity. And again, using this weekly time frame, broken through, retested, rejected, now holding on that trend line from the wedge that we've broken out from. I am just taking this into consideration, and the weekly time frame as well. Wicks have been curving to the downside, signifying to me further weakness, and we just need that big push. Because if we just, do you know what, if I just clear these all for a second, if I just clear all of this off the charts using the weekly time frame, guys, very simply, look at where price is constricted between. There. In the overall grand scheme of things, we are actually consolidating. Even though you're looking on a daily time frame, we can catch these huge movements up and down. All price is actually doing, besides spiking to these zones back and forth, is it's consolidating. Look at the candle bodies. They are not breaking through these levels. The actual body-to-body region is here, but the spikes are occurring down to there on a nice key level of 0.30, and you're seeing that throughout the whole market. So going to the daily time frame now, we can extend this out slightly. Actually, no, ignore these because these are breaches. But look, even when it breaks out, it's retesting and then breaching back in. All you're seeing is a constant bounce back and forth from here to there, bouncing back and forth slowly but surely. And what could be occurring is a huge sharp test and a breakout before we bounce back again. So when you're looking at this from the daily and the 4-hour perspective of all the trend lines without this box marked off, it can be quite hard to actually see the overall picture. But if I just go to this, extend this out to the very peak of this trend line here, as you can see, broken below, retesting, could see a sharp drop down to this zone, fulfill these liquidity regions down to 28.5 cents, and then it just rockets back up straight back into this box. Because what I believe will happen if this breaks below is it will trick people just like it did here, tricked, retested to potentially fall lower, rocketed back in, tested here, and blew through the roof. And I do believe there is a similar circumstance coming into play before those upside targets unleash. And as you can see, there is a lot of rejections to the upside, but a lot of the stability and the actual failures to break above are occurring more from the downside. So I do believe the support actually far outweighs the resistance, as the resistance is getting broken quite consistently with these huge wicks, but the real strength is coming from the downside of these wicks right now, which are not being as volatile as the upside movements, which is signifying to me the buying pressure is coming in, but the downside is still being accumulated. Now remember, the same way we dollar cost average is the same way these banks and governments and institutions and Wall Streets and all these people who have a fairly large stake in the market or investment, they're accumulating. They accumulate buy orders and sell orders when it comes to day trading, just as they do in the stock and forex market. So what I believe is happening here right now is buy orders, are being accumulated in the masses around this region. So getting rid of this box for 1 second. Let's make a fresh box. Buy orders are being accumulated here. Weekly time frame, buys, buy. Look at the reversal this region caused. Price has not been breaking this region ever since. So what you're looking at here is, besides a few breakouts, buy orders I do believe are being amassed in fortunes or in this region, ready for an upside breakout. I believe a few more attempts down to this region and price will absolutely rocket to the upside. So just paying attention, just a little update, and I wanted to kind of give you an insight into how I'm viewing this market overall, as many of you are confused why I still believe there's more downside to come, or why I'm even so hesitant to believe there could be an upside breakout just yet. So again, please disregard the intraday movements and the spikes as a actual shift in bias. This is simply just keeping you in line with the market itself on an intraday and intraday basis. But the overall long-term goals, I mean, guys, it's fairly visible. When you actually use the weekly chart, you can see how minimal these price bounces actually are in the grand scheme of things, and how we are just constrained between two barriers. So that's all I really wanted to show you, and just show you here as well the total market cap. If I drop this to the weekly, this has been a fairly significant run, which is nice to see. Could be very similar. Look, run up, sharp pullback, back to where the prior bearish candles were. Very similar. Prior movement, bang, wick rejected, bang. Wick rejects here. It aligns perfectly with a similar movement that occurred here. So I do believe there could be a sharp drop. Again, look how bullish this looks before absolutely pulling to the downside. Maybe it will breach a bit higher before pulling lower, but there is definitely going to be, well, not definitely, but I do believe there's a very strong bias towards a final downside push, because this rally has been extended for a fairly long time now, and the market usually does not break out until there's been a sharp push to wipe out all the buyers. So those who have been prepared, again, trend line, confluence, breakout, retest of this trend line, and retest of this trend line. Double confluence on the total market cap as well. Something to take into consideration. Hopefully it's been a bit of an eye-opener. Just a little update, but hopefully it has been an eye-opener for all of you. And guys, again, as always, I'm analyzing the market 24/7. I probably won't sleep tonight either, as I work on a few more things. So should anything significant happen, then I am here to update you all. Regardless, have a good Saturday and a good Sunday if I do not speak to you guys from then.